All right. Excuse me, guys. Got a bad coughing fit this morning. Morning, Nighthawk. Sorry, still getting set up here, my friend. So we had our yesterday happen, and interesting yesterday it was. We did move lower, but we moved actually. We closed about 60% in the day's range, which is actually bullish. Actually, a bullish indicator coming yesterday, and today we're opening at about where the close was. Not saying that we're healthy, but they're still picking at this market. It's not all bad news. This isn't 2008, so I don't want people to, panic and stuff like that. We don't know when we're gonna, come back. Today quadruple witching. Yeah, I guess it is, huh? Yeah, darn it, it is quadruple witching Friday. Maybe that's why they bought a bunch back yesterday. Probably a bunch of people were short going into the Fed announcement. Maybe that was just some covering, and that's good potential too. I would also like to say that we are going into the last week of the year, which is traditionally pretty much low volume throughout, and we'll have to see how that plays out going on throughout next week. Um, so there's that we have to watch out for as well. Probably will be muting frequently to cough so I don't do it in your guys' ears. All right, so market gapping, well, not gapping at all this morning, as a matter of fact, against according to the Q or the futures markets there, looking at a very neutral close. On the Qs, it looks like we probably are going to gap open a little bit. Officially in a bear, yeah, I think we did touch that status, 20%, which is what actually there's our line we've had. So yeah, I'll call that good. I'll call that a, a bear market. Real morning. What's up, Eli? So let me go ahead and delete a bunch of these lines. But yeah, it looks like we did hit that bear market line. Poke through all those levels. Good morning, Lori. So there was our bear market line we drew a long time ago when we hit it. We hit it, guys. So welcome to the first bear market in the post last bear market era. I guess really is the best way to put it. That's kind of funny. Hold on a second. All right, I'm back. Yeah, right, Justin. Gold and silver. Gold's doing okay. I'm pretty sure silver's probably doing okay as well. Gold's actually rallying, which is odd. And then silver, not rallying yet. Maybe above 14 and silver can get going, but gold is actually rallying a little bit, which is interesting. Yeah, we talked about last time we really talked about gold was down here, and we were looking for a pop. There was a gentleman in here named not in here, but in my real crypto power hour, named Aram, if I remember properly, and he went long like at the tip of this bar right there and asked me about a trade, and I'm like, yeah, looks so good so far. And then so we got that, it bounced up higher, and then we had this day up here, and I'm like, well, this thing needs to turn around if it breaks under here. You got to get out, and it broke under that. I think he got out, and then I never heard from him again. He was here for like a week. One of the only guys really talking about gold that much, and we talked about it pretty good for about a week and a half there, and the man went away. But you can see right there the average volume increasing in gold right there. So it looks like there's a little bit of a run in gold right now. Personally, don't really care. I'll wait for a better setup to buy. You could have bought maybe off of that trend line break right there. That could have been a good place off of that elevated volume. And then now we're kind of in the middle of a little mini run. And like I said, we'll see. We'll see how that goes. But gold not my favorite. Let's check out some pre-market movers real quick. Only a couple of minutes till the market opens. Let me see if there's anything worth looking into. EOLs, IVAC, age. Go short on age, ladies and gentlemen. Short on age. Whatever that is. LAVB, AKRX, TIK. None of these look anywhere near intriguing. Now KB Homes is on here. Looking horrible. Nike's up 9%. Yeah, I did see that on the overnight session. 73. So in between these, so we're about like here somewhere on Nike. CYAD, CRCM. None of these look really intriguing. Even Nike doesn't look that good. What about on the downside? We got PRGO, which is down 13%. PTI, which is a piece of garbage. HII. Not much on the downside either. USOU, 3 times oil is breaking down from that. Looks like that bear flag in oil broke down the other day. We didn't really talk about that, but looks like there's a little bear flag in oil. That would have been a great shorting opportunity. Looks like some people took advantage of that. But moving lower out of the stage right now. So, back to wait and see time, ladies and gentlemen. See you in 2 years. Yeah, I don't know. We'll see. I mean, it's possible if you look at the... I mean, look, we've hit 20%. We've hit bear market territory. We know the stories that are on the surface, which is China trade policy, and then inverted yield curve. What else? China trade policy, inverted yield curve. Yeah, what else is there? There's like 1 or 2 others. My mind's a little blank this morning, though. In Arizona, it's the time of the year where it starts getting dark. It's just getting light right now, so my brain's not quite functioning yet, which bodes really well for trading. So, Brexit. Yeah, I guess Brexit. We can include that in there too. I'm not super concerned about Brexit in terms of the U.S., but it would be a little bit of a damper. No one knows really what kind of effect that's going to have. It'll probably just be bad for Britain. I don't think it'll necessarily be bad for the U.S. economy, but Britain is one of the largest world economies, so maybe that's another headwind. Yeah, typical bear market lasts anywhere between 9 months and 2 years. So it doesn't mean we're going to be down for 2 years, but it definitely means that we could be lower for a while. Let's go do some more bear. Let's go back and revisit bear market. Right now, we'll see what happens over the next couple of days, but we'll see what happens there. Yeah, maybe. I mean, we've already had pretty substantial run, up about 30% in BTC, which is pretty good. Pretty good so far. Historical bear. Oh, here's the one. 11 historical bear markets. Remember, we looked at this one. It only gave us like 7. I'm like, what are you talking about historical? Where's the 11? I was looking for 11. You told me 11. You gave me 7. I thought this was a good list of bear markets, and we did find some parallels with some of these. So, yes, James. Hold on, guys. Rare. All right. All right, so here we go. Back at it, guys. Sorry about that. Bay of Pigs, Cuban Missile Crisis. Hopefully we don't have this going on. So that's good. This is when I thought that we kind of meshed with a little bit. Rapid fire growth ended with mild recession. This we could lead with a mild recession based on our growth lately. Accompanied by a relatively high inflation of about 6% annually. We're not there. We definitely don't have that kind of inflation. Bear market began just as Richard Nixon elected president. 2 months was of assassination and riots. Weak economy added to a tense national atmosphere dominated by U.S. growing. So we don't quite have this. We do have this. We have this situation: rapid fire growth with mild recession. There was another one of these that was fairly interesting as well, along that prolonged bull run. Heated debate between U.S. and Germany over currency valuations, very similar to our trade war. Not sure about devaluation. You could almost put Brexit in there too. And this one, the bull run started immediately thereafter. About 33% in 3 months. There's a 3-month bear market right there, 1987. I will say that was really weird. 21 months here, 18 months here, 6 months here. So a bear market can take many forms, and 17 months for. I mean, everyone says 2008, 2009, but it was 17 months. It was pretty much towards the tail end of that 18-month period. I don't know if we're going to get there. But if you look at our headwinds going forward, nothing's changed. And I don't have my 11 other bear markets. For whatever we got, like I said, we got 7. They promised me 11, so they lied to me. It sucks. They lied to me. So we kind of maybe a 6 to 9 month bear market possibly here before we finally get going again. I will say this though, guys. These are great opportunities. Don't be discouraged. Don't leave by any stretch of the imagination. We can turn around at any time. In fact, if you look at the charts, there's nothing to say we won't turn around here first quarter. We're down about 20%. That's not all the bear markets. I'm like, I really want to find a post that lists all the bear markets. In fact, I thought about doing this research myself. Haven't had time lately. Trying to finish damn house remodel by Christmas. Okay, here's Wikipedia, which is always going to be a beautiful looking thing. Crashes and bear markets. There's only about 1 million of them. It's actually not too many. But yeah, I'm not sure. See, they don't really give you a lot here. It's just some weird people posting up some weird stuff, it looks like. So I don't know if I really like that one. What are we doing here now? Looks like we started kind of, and we haven't really moved that much on the open. Let's take a look at what's moving today. What's at the top of my list? We got about 0.6% to the bottom of my list, which is pretty good. Nike's leading us higher. And there you go. Man, getting allergies killing me today or something. It's pain yesterday. I wore a respirator the whole time. I don't know what's doing it to me today. Oh yeah, by the way, that was not the longest bull market in history. FYI. Short history of emerging market corrections and bear markets. See if this thing's any good. This one's not bad. There's a bunch of them here. This only goes back to Looks like the 90s, and there's quite a few here. So we have corrections and drawdowns, or I'm sorry, corrections and bear markets. Oh, that's MSCI emerging markets. So not quite the same. Oh, emerging market. Okay. That's some good information though. If you want to trade emerging markets, that could be pretty good. Financial Times. Sell Tesla. Let's see. Well, it depends on your time frame for the trade. To be honest with you, there, Laurie. Um, like I said, This is kind of a longer term investment. My wife is still in Tesla. I haven't advised her to sell at all. So, and this is still kind of a, I don't know about it's not early stage story in Tesla, but it's definitely not late stage in Tesla. So if you have a longer term time horizon, I would just write it out. My wife's not selling Tesla. I've never told her to. I haven't really thought about telling her to. Tesla's just getting started. Um, we talked about, I'm not sure if it was with you or someone else, I don't actually remember, but um, yeah, we talked about actually on that peak day right there. That was the peak day. I'm like, yeah, buy it. I'm not buying Tesla almost anywhere but I always preface it with longer term because this is a volatile name. Um, could we route to the downside quite a bit? Yes. If you don't want that to happen, then 5% loss isn't going to ruin a position or an account. So if you want to exit it, fine. But um, personally, I would just hold it for longer term. We're kind of in the middle of the range. I don't think it's getting below 250 at all. If it gets to 250, buy it again, in my opinion. Hold on. All right. Sorry, guys. Sinuses are murdering me today. All right, so we have here's another little, not as graphically beautiful as the other one, but 1973 after Bretton Woods. So after the Bretton Woods fixed rate exchange mechanism kind of eroded away there when the U.S. Looks like U.S. leaked gold to Europe while imports boomed. This was compounded by the oil crisis and inflation. Global equities fell 45% between January 73 and December 74. Um, then it says, in historic context, it's hard to say that equities were expensive. Let me go ahead and bring it over here. Hard to say equities were expensive, but at this point in the cycle, they had only fairly recently reversed the yield gap. In other words, they were trading on a lower yield than gilts. I don't know what gilts are. There was little household or government debt by today's standards. I don't even know why that matters necessarily. Um, so we don't really have an oil crisis in terms of like oil prices, but oil is dropping precipitously at this stage of the game. So that doesn't bode well for our economy because we are now a net exporter of oil, and so I don't think that's good for the economy. Yeah, so this one sucks too. I need to do a better synopsis of bear markets. Um, yeah. So Laurie entering a long-term bear market. I don't know. Like I said, if you're in it for the longer term, um, the only problem we're going to have with Tesla, I mean, fundamentally at least, is, I mean, what could happen to Tesla? I really don't know, man. They're the their cars are just phenomenal. They're exploding everywhere. It's ridiculous. I mean, in like 2 or 3 years' time, you're going to see Model 3s on the road like Camrys. Seriously. So I don't know. Yeah, I don't know if you ever want to exit your position in Tesla until we see something. I mean, I don't maybe I don't know, but yeah, right now I'm not super intrigued to get rid of my Tesla. It just had like a bad 4 day route here too. So, maybe we'll get some kind of a throwback. I don't know. Yeah, that's true. What if Elon dies? Well, I don't know. It's like not investing in Berkshire Hathaway in case Warren Buffett dies. And they were talking about that 30 years ago. The dude's still here. Elon's young, man. He's a young guy. Don't worry about stuff like that. Don't worry about stuff like that. His Tesla. Well, no, he just signed a new compensation package for like the next like 10 years. He just re-signed a CEO that'll make him like $200 billion. I mean, talk about being the world's richest man. He's going to be the world's richest man if he meets all of his targets. Um, Elon Musk compensation agreement 2017. I mean, could earn 55 billion. So his pay package alone could make him 55 billion. Um, let alone so the company's worth 52 billion if it. The catch is that compensation is tied to the company's success. So Musk will only be paid if Tesla reaches a set of aggressive milestones that aim to grow the company's valuation from 52 to 650 billion dollars. That's him basically stating, I'm going to 10x this company, which is weird. It's a little weird, but a little strange there. But it's looking for a certain time frame. I mean, for a CEO to make $50 billion, that is ridiculous. No CEO makes that much money. So, um, that's actually pretty crazy. I don't know any CEO that has a pay package worth 50 billion. It says several years. I'm not quite sure. Oh, 10 years. Yeah, I thought it was 10 years. So it gives him. So he's at the company 10 years. He's there for 10 years. He's not going anywhere. Receive my Christmas bonus. Man, tax sucks. Um, yeah. I mean, 10x isn't that ambitious. How many stocks 10x? Not too many. Not too many at all, especially 52 billion. So, and maybe if it's not that ambitious, then he's going to make a lot more than 50 billion. There's higher thresholds than that 50 billion, if I'm not mistaken. Yeah, so I will say this: if you guys are, you guys mentioned bonuses. You know how bonuses work, right? Bonuses are so when you get taxed on your paycheck, it's taxed like you do that all year long. I was just explaining this to someone else. So if you normally make like $2,000 on a paycheck, let's say you pay $400 in taxes, that's a 20% tax rate. If you get a bonus of $1,000, you're not going to pay $600 in taxes. Let's say that next tax bracket is 30%. You're going to pay $900 in taxes because it's going to tax that paycheck at the next tax bracket. So that's why it's different. If you think you're going to get a big fat bonus on a paycheck, change your withholding. You should change your actual withholding on your W-4 to whatever. If you're already at zero, you're screwed. But if you want to change it to zero for that one paycheck, talk to your HR people, and you should be able to do that if you want to avoid a crazy taxation on that one thing. Just a little note on taxes there. So Tesla back about 1%. Yeah, I wouldn't ditch my Tesla here. Eli Lilly, INS. What else is down here? Goose is down. AMRN. Twitter's down again, another 2% based on Citron FUD. Well, you have to raise your withholding then, Eli. You have to raise in your case, if you're paying taxes, you have to raise your withholding. You have to go to 1 or 2 or whatever the numbers say. I mean, you can do the easy math. You can see what you paid in taxes this year. So 0 is you getting the most in your paycheck, which means you're going to pay more in taxes. You only claim 0 if you know you're going to owe a boatload of tax, or if you know you're going to, hold on a second here. That's wrong. If you know you're going to get back a ton in taxes, you claim 0. If you know you're going to pay a ton in taxes, or is it the other way around? Am I backwards? Oh, maybe I am backwards. I'm sorry. I think I'm screwing that. Yeah, 0 is how many? Oh, yeah. Yeah, I think I'm wrong on that one. Sorry. No, if you claim like 4, you'll have less withheld. Yeah. Well, usually if you have 0 dependents, you end up paying more if you have 0 dependents. Anyway, yeah, I don't want to get my head wrapped around that either. Consult a tax advisor. Yeah. All right. Anyway, yeah, Qs here looks like they're falling off again a little bit. But yeah, I think looking into the previous bear markets, and I don't know, we're already down 20%. Not today. Something's weird with me today. Usually I'm more on point, especially with tax. Actually, I do my own taxes. Done them for years. I'm like, I won't say I'm not a CPA, but I'm probably like 40% a CPA. CPAs, I mean, they have to know a lot of weird stuff. I definitely don't know all of that. Okay, history of bear markets. Yeah, what's the VIX doing these days? Can I just type in VIX here? Yeah, I can type in VIX. So VIX is up at 27. Let's go to the weekly chart here on the VIX. We're back up in the 20s. 20s used to be normal for us on the VIX. Oops, that's not what I wanted. Oh, I got 20 years. I should just scroll. Yeah, so you can see 20. We used to be 20 up here for much longer, and lately we've really been low. So your options volatility is going to be through the roof at this stage of the game. So selling options now is probably quite advantageous. Don't know if I'd be buying options right now. Oh, what's this? No, not that stupid chart again. Everyone's sending out that dumb chart. I don't want that dumb chart. Yeah, so yeah, in terms of bear markets, as a matter of fact, if you're really taking longer term positions, buying during a bear market is probably pretty advantageous. Okay, so let's do this. I don't know, I don't think I'll get that much data on here. The Qs haven't been around that long. Longest history in Thinkorswim. TD Ameritrade to buy Thinkorswim for $606 million back in 2009. I thought it was longer than that. I thought it was like 2004. Wow. Okay, so can't do Q. Let's do SPY. Maybe SPY will give us. Man, that looks horrible. Look at that. Looks so bad. Imagine that. So let's do this time frame. Yeah, there we go. Max available. Let's go weekly. Okay, so this is SPY. This takes us back to 1993 right here. Man, look at those bottoms right there in 2008. Look at those volumes on the bottom. That's insane. Our volume here looks pretty timid in comparison on the SPY. So this is an ETF as well. Really, going back to 93? I did not know that. Learn something new every single day. Do you think we bombed in crypto? Because I feel like we may go a little sideways and then drop at least once more. No, I don't think we've bottomed. I think this is a really good rally. But I don't know if we've bottomed. I mean, there's definitely some good trading opportunities. Bitcoin Cash has really been leading us, and I mean, you tell me if is Bitcoin Cash going to be our leader when we bottom or not. Bitcoin's only rallied about 30%. I say only from the bottom down here. Still haven't overtaken this high here at 4,400. So no, I don't think we've bottomed. I think we just dropped 60% or whatever it is. Yeah, I think we dropped 40%. Yeah, I think we dropped 50% and then just had a retracement. Like if you draw a fib on this, if I can find it, because I still don't do this. If you draw a fib on this from that top point, we haven't even bounced up to the 38 point yet. So no, we're far from out of the bull market. This is just a relief rally. So yeah, the only two bear markets we've really had here, pretty much in the whole history of the SPY here in terms of bears, I think is these two. I don't think this qualified. Yeah, 22, I guess that did qualify as a bear market right there. And we talked about those high volume bottoms, we're on the weekly right here on the SPY. Welcome, Kevin. We talked, a while ago about, I think it was November, about high volume bars in terms of lows. We weren't looking at the SPY though. We were looking at the Nasdaq futures. So we have a high volume breakdown bar right there. This is so today's Friday. We should be of equal stature, if not higher than this one. So this could be a bottoming week potentially. Here is the bottom week on that elevated volume candle. I'm gonna do this whole thing again, I guess. So this one got a little bit lower. This one obviously was a little minor bottom there. We already went through that. High volume week right there. And then, so 2010, 2011. Here's your high volume week right there. Ended way up here though. And there's another spiky week. So if you bought on this week, you would have had it held for a while. Permabull. Well, you know what? The market's bullish. I mean, the overall trend of the market is bullish in the longer term. I'm talking longer. This isn't day trading, guys. I'm not talking about day trading right now. I'm on a weekly chart. Time frame is very important. Everyone should realize that time frame is extraordinarily important. And right now I'm just kind of looking at stuff. I mean, don't get me wrong. The daily charts are horrible. I'm looking longer term. Like when could we start a move back to the upside? You look at that high volume candle that puts in a small bounce, which leads to a bear flag. If you omit that one little wick right there. And then this takes us on a big route to the downside. No, but I'm just looking for historical precedents, Eli. I'm just doing some research. That's all I'm doing. You get mad at me for doing research? So look, I do most of my trading, in fact, all my trading in my Roth IRA. So I do have a swing trading component, but I also have a component that states that buying while the market is really down in the dumps can be a little advantageous. Made a couple buys here, here and here. Moved to cash over here, somewhere over here. Whenever we drop through a thing, and and now I'm looking to rebuy at some point. We don't know what the future is going to hold. The market's going to look by the time the market looks bullish, it'll be late. It'll be late in the stage. That's how the stock market works. It doesn't look bullish down here at all. You know what I'm saying? But if you wanna buy for longer term for like if you want to take a portion. So in a retirement account, I don't necessarily think you should swing trade your entire retirement account. Personally, at least that's not how I'm approaching mine. I'm taking kind of a two strategy approach. I've got my long term position, which is like my Nasdaq ETFs, my TQQQ or QQQ, depending on how bullish you want to be. And then you have the swing trading portion, right? So there's kind of a little bit of both in there. Hold on a sec. All right. But I get what you're saying, Eli. I mean, permabull, yeah, I'm a permabull. I'm always looking for the market to return. Does it look promising in the moment right now? No, it doesn't. But at some stage, and like I said a little bit ago, they're picking at this market. They're not, this isn't a situation. Don't get me wrong, it's a drastic move to the downside, but they're hold on, I'm fighting a sneeze. Ugh. Don't know what's going on today. Um, yeah, so there's the Q's moving lower, but like I said, you look yesterday, there's people buying this market, institutions buying this market. Like right there, you got a nice, it could be short covering. I mean, that's always a possibility. Um, but like you look at yesterday, and there's people buying this, so it's going to turn around at some point. And we also look at Amazon, Apple, all those guys. I'm looking for something. We don't have it yet, but I'm looking for something. In the meantime, I'm doing some research, right? I'm looking at high volumes. I'm just kind of talking on my butt as I do it, I guess, because I got to say something. But yeah, does Apple look healthy? Absolutely not. Could it come down and test this lower trend line? Um, Absolutely, absolutely, it could do that. They're buying and losing. Well, yeah, that's fine. That's them. That's them. That's fine. But the whole point is that, all the time. Man, you fight hard, don't you? What would you like me to say? I'm trying to do. So I'm basically doing what I would normally do during a bear market, which is research. You do research during a bear market. You do your homework. You go back and you do portfolio reviews. Um, don't trade. Yeah, that's a good. That's good. I probably don't say that enough, or haven't said that enough. You're probably absolutely right on that one. Hold on a sec. But yeah, no, short-term long trading here is not advantageous. Um, but at some point you will get a rip-roaring rally at some point, and yeah, probably won't be today. I think it may be towards. I think we have a good chance of it probably towards the beginning of the year, which, is in about a week and a half, 2 weeks. There's a chance of it. There's earnings seasons coming up at some point. When is earnings season coming up? Hold on a second. I think it's February. No, I think I put it in a folder. Cash is king. When is the earnings season? 5 weeks. Earnings season's in 5 weeks. So 1, 2, 3. So yeah, middle of January. I think the hope right now is that earnings are pretty bullish in January, and that could provide impetus for a turnaround. Until then, it's pretty much open season on the trend, which is lower. So, probably if you do want to trade, we haven't looked a ton at shorting opportunities, but you could try to look at some shorting opportunities. Netties is still holding up there. Look at that, gapping up pretty healthily right there. Chesapeake Energy, man, taking it on the chin. But yeah, so when you get these routes like this, you do your research. Unless you want to do some shorter term strategies, which would be not necessarily day trading, but try to look for those short term short trades, things of that nature. Man, TZA is off to the races. That's a 3 times short ETF of the Russell 2000. ODFL. Waddell Reed here looking like it. Go through sectors. We could go through sectors. I think on FinViz, probably better to do that on FinViz. IBD sectors aren't that easy to get to. They don't make it that easy. You need to look at ETFs. Maybe ETF map. Does someone have an ETF map? Sector ETF map. S&P 500 map, or is that just? Oh, so there's sector. Yeah, okay. I thought they had something. Financials, consumer goods, industrial, healthcare, basic materials, services, and technology. And they have it broken down a little bit deeper than that. You got internet, technology, application software, whatever those are worth right there. Yeah, it's pretty mixed. There's no major clear direction today. It's fairly mixed. I don't see anything here necessarily standing out, good or bad. Pretty much in every sector you've got some green and some red. Credit services is greatly red right now. Financials are pretty red, which does not bode well for the market when financials are red. Healthcare is usually a leading sector. We spend so much freaking money on healthcare. They have Apple and consumer goods, huh? And it takes up all of the electronic equipment section. Soft drinks are doing good. Pepsi's doing good. That's a defensive move. Nike's doing good. I forget why. I don't know if I saw why. S&P World full. ETFs. Energy sector. Japan is down a tremendous 2.28% on Japan. Yeah, I was looking for. Okay, yeah, we can. Want to go through those? Yeah, we can go through those. IYC. I'm not quite sure what this is. Looks like a chart of the NASDAQ. Or SPY? I'm not sure what that is. Doesn't look very good. IYE. That doesn't look very good. IYK. These emerging markets or something? Yeah, these are all way low. These are all due some kind of rally. Usually don't get that kind of consumer, IYC consumer services. Energy ETF, my goodness. The funny thing about, see, this bear market seems a little different than others that I recall. I mean, it seems like we have some actual, I don't know, like 2008. I mean, I had to ask myself the question: is the U.S. economy really going to go away? That's kind of what it felt like. The answer was no, but it did take a huge chunk out of the market. iShare sector ETFs. I could look that up, I guess. I haven't looked at it like those, like that. See if it'll give me a list there. Holy crap, they have a ton of them. They got 7 pages of, like, what are they showing? Oh, 345 in total. That's a lot. Wonder if they, okay, see category, asset class, equity, emerging, region. Okay, equity. Only 237 of equities. It's a lot to go through. I'd like these on one chart. Give me on a chart. That's why I was looking at FinViz. I should start keeping a list of sector ETFs. I usually just look at IBD and I usually use their sectors. I like how they're breaking them out. IBD stock of the day emerges as defensive play, beats market, which is DORM, whatever that is. Yeah, DORM's looking pretty good. Okay, yeah, if you can do that, you could put together a little cheat sheet or something that opens up charts or something. Dorman looking really good right here. Lots of green wicks up here. That's nice. A little bit of reversal there in the Qs. So research. ETF Center. I haven't spent much time in there. Oh, here we go. There's a lot of ETFs. A lot of ETFs. Equity ETF, sector, industry. Here we go. It's a little better. That's at least manageable. ETF screener, which does have a lot of the same eyes that you're looking at. Let's look at this for a few minutes. I'm going to roll. I got to do my newsletter. VGT. This is U.S. healthcare. Housing's going to crash. I hope not. I own a house. My house is going to crash. No. VGT. So this is U.S. healthcare. No, this is something else. This is Infotech. Information Technology, IYH, U.S. Healthcare. We're not going to have healthcare anymore either, guys. Sorry. IYT, which is one of the ones you were talking about, Dow Jones Transportation Index. These things are beaten down so far, man. IYT, IYW, Dow Jones Industrial Tech Index. So I guess the Dow Jones Industrial Average? That's not a very good name. VHT, they have as VG Healthcare, whatever the hell that means. SOXX, SOX Semiconductor Index. So we're not going to have computer chips anymore either. U.S. Utilities, doing great. Utilities in a bull market. It's not what you want to see. FBT is biotech. That just they took a lot of risk off the table there. VPU, another utility index holding near highs. FBT, biotech. VPU is utilities. FDN, IYF. XLY, consumer discretionary. That's a pretty good little buy candle right there. We're just putting in right there on the Qs. ICF, IBB, IWR, SMH, XLV, VDE, IYR. Well, right, I haven't been really exposed to this list before. I'm not quite sure what I'm looking at. I'm looking for, I don't know what I'm looking for, to be honest with you. Sometimes you just start doing work. You just start going through charts, and something be like, wow, that's either way too low or that's way too high, or something's holding up well. You'll find something. Sometimes you find nothing. But I do this sometimes. Well, also I gotta get going to do my newsletter. That takes a while to put together these days. FXH, XLI. So this is a Spider Industrials. I mean, beaten down so far. XLK. We don't just buy stuff because it's down so far. Good bullish signs on the Qs. They're coming back. Told you they're picking at this thing. These guys have long-term time horizons, man. If the market's down 20%, you're damn right institutions are picking. XLK. PJP is a pharmaceutical. VFH. XLU. VNQI. X Global ETF. Vanguard Global X US ETF. Whatever the heck that means. Real estate. That's real estate. So that looks like a bear flag right there on VNQI. Consumer staples again. Big volumes the past couple of days here on consumer staples. Someone's got to have a financial model on the U.S. economy and consumer staples. Like, we always, buy certain products in certain amounts a majority of the time. And if we get much below that standard, then they'll be buying those consumer staple stocks. Absolutely. Someone's got to have that model. RWO, bit of a double bottom. Real estate. I think that's what Eli was talking about earlier. H or W bottom. FXG. And that looks horrible. What is that? Consumer staple alpha. Whatever the heck that means. XRT is a retail. Whoa, look at that. All the way back to the lows of last year. Giving it all back. XRT, REM. Something about mortgages. IS, FTSE, NAREIT, MORT. SCH. US REIT. No, we do not have a collapse of the entire consumer market. Absolutely not. That's what I'm saying. I'm saying a lot of these are are fairly overreactive. The market is forward-looking, so they're looking at something. You don't quite know what they're looking at, and that's the difficult part here. Some of it is just selling because of selling. That's part of it. This looks like it. RWX. That looks like it could break down further. Wilshire Real Estate. Wilshire Real Estate right there. Hack. That's funny. Cybersecurity. No more cybersecurity, guys. No more cybersecurity. TDIV. XHB. That looks bad. That looks very ominous. It's like we're at a stage of a double bottom or a collapse. At least in a lot of these ETFs. That's a home builder ETF. That's what Eli was talking about. I think XHB was on your list, right? Yeah, it was on your list. So, yeah, exactly. Double bottom or an H pattern. Could do a low risk entry right there maybe. But hold on a sec. All right, guys, I gotta go. I got a children's situation to deal with, and I gotta get ready for that Power Hour newsletter. So, yeah, I mean the markets look bad, guys. We hit bear market territory. I'm not saying we're done going down. Okay, you can't call that after a day or two. Yesterday did have a little bit of buying to it. Today does as well. They're definitely picking down here. You know, I mean, if you had multiple billions of dollars in multiple year time horizons, you'd be picking down here too. So if you want to do some picking, I mean, it's not advantageous for a trader necessarily. There's no buy signals down here, ladies and gentlemen. I'm not advocating, blanket buying by any stretch of the imagination. But they're picking at this down here. We can go down another, maybe 10%, I would say. There's definitely a possibility of that. But, billionaire institutions that have just hundreds of billions of dollars will hold on to some of these bargains that they're finding right now. And they'll hold on to them for years. These are some of the most patient people you'll ever meet. So that's what I'm referring to when I'm saying there's people picking at it down here. And they've been picking at it all the way down. We've talked a little bit about that. So I got to run, guys. I'll see you guys. I guess I'll see you guys on Monday. Market open on Monday? Yeah, maybe I'll see you guys on Monday. All right, guys. Have a good weekend. Bye-bye.